Living in sunny South Africa, we take quite a lot of things for granted. The weather and, of course, gold. Well, it's not sure that South Africa will be the biggest gold producer in the world for very much longer. But even so, if you follow the charts, you'll see that when the gold price rises, the South African rand strengthens and vice versa. GFMS is the world leader in analyzing these trends, analyzing what's happening in gold. It has people all over the world digging around, and one of the most closely watched reports is the quarterly analysis of De-Hedging by gold producers. That's just been released, and we're joined now in London by William Tankard, who's with GFMS. William, how long has GFMS been looking at the De-Hedging story?
Well, on a quarterly basis, we've been following it since around about 2000, but De-Hedging has been an important component of the gold survey since 1990s.
And when did the trend towards de-hedging rather than hedging of gold by producers change?
Well, I think after you saw a significant influx of hedge book increases in 1999, there was a steady rundown kicking off from around 2001.
The latest quarterly that you've had a look at shows that the de-hedging continues, about 1 million ounces, which is interesting to put it into different terms, is more than 30 tons of gold that was now de-hedged by the gold producers. What does that tell us?
Well, I think the important thing to take away is, in fact, that in the larger context, 30 tons is not actually all that much. In the previous two quarters, you saw significantly larger levels of de-hedging. So 30 tons is not a large amount. It's actually a slowdown. Does it mean that we've now had the most, or seen most of the de-hedging that will occur? I think for this year, the second half will prove much lower than in the first half. But I think we are beginning to see a significant slowdown. If you think that the hedge book now amounts to around about 1,000 tons. So there's in fact not a huge amount of scope for continuing high-level rundowns in the book.
What was the peak of the hedge book?
I'm sorry?
What was the peak of the hedge book? What was the greatest level that it reached?
It reached around about 3,000 tons in 1999. So from that, obviously, you've seen a cut of 2/3 from that elevated level.
And still at the moment, it's about $9 billion underwater. That, I presume, is something that the gold producers would like to get off their books as soon as they can.
Sure. Well, I think you've recently heard announcements by Barrick that, in fact, that they're reasonably comfortable with their hedge position placed against their gold project. They've already cleared the hedging against operating mines, so they have outlined that an elimination of further hedges is unlikely in the near term. I think AngloGold would quite like to reduce their level of hedging, but whether that's going to happen in the immediate future is a good question.
It's interesting to note, William, from your figures that there was 30 tons that was de-hedged in this period, but a much bigger impact is what's happening on the exchange-traded funds. Just in this quarter, 138 tons extra went into exchange-traded funds. When you have a look at the two sides of the equation, is it likely that exchange-traded funds and investment demand is going to be a much bigger influencing factor in future?
Well, I think you've seen the rundown in the hedge book already, and as I say, the scope for hedging going forward is somewhat reduced, whereas ETF is much more of an uncapped story.
The gold price average during this quarter, $680 an ounce. Is that the highest ever?
That's a quarterly record. That's right.
But we haven't seen it in euros, although in US dollars then the gold price is at a record. euros, it didn't change much.
Well, as you've seen, there's been quite a strong response to the weakening US dollar, and that has been a key component to the increase in gold price.
So it's a dollar play rather than massive investment from different parts of the world?
Well, I think it's a case of both. As investors have looked to diversify their assets, you've seen a moving out of the dollar. But on top of that, obviously you have the story of a weakening dollar leading to a stronger dollar gold price. But I think there's going to be increasing scope going forward for further asset diversification from dollar-based assets.
William, you did explain that because the hedge book has been reduced to a third of where it was in '99, it can't have too much of an impact. But what about the whole subprime story? Has that run its course yet as far as the gold market's concerned?
Well, I think initially what we saw was actually many investors shying away from risky assets, and I think that's likely to continue. I don't think the subprime crisis has completely come to a head. I think there's expectation for that to continue. And so, as a result, I think you'll see gold as beneficiary of that.
And of course, there is the central bank marketing agreement, or the agreement under which they may only sell a certain amount of gold. How much longer has that got to run?
I'd have to get back to you on that one.
Because in this period, we did see further sales coming through from Switzerland, Spain, France.
That's true, yes.
And as far as the UK is concerned, because Britain, or the Bank of England, sold a pile of gold a few years ago and did it at pretty much the wrong time. I was wondering if at GFMS you had any indication of when central banks sell, is it a good time to follow them or not?
I'd have to get back to you on that one.
Okay. The jewelry market, is that remaining buoyant?
Well, I think you've seen, particularly in the key markets such as India and Turkey, is strong. Although perhaps you've seen continuing weakness in some of the key Western markets in Europe and the US, India has remained strong so far.
How closely correlated is jewelry demand to the price in local currency?
I'm sorry?
How closely correlated is jewelry demand to the price in the local currency?
I think that's quite a key consideration, particularly in the price-sensitive markets such as India and Turkey, where they really do look at the rupee and Turkish lira gold price, and that will influence their buying or selling.
William, looking ahead, it's hard to predict these things, but the fourth quarter, will we likely see further de-hedging by gold mines?
I think you'll almost certainly see continuing de-hedging in Q4. At the moment, we're forecasting around about 1.75 to 2 million ounces of net de-hedging. I think there's scope to see further activity from Newcrest, who are currently running down their book, and also you've seen a certain amount of project de-hedging, such as Redback Mining, who are recently having confirmed that they have also eliminated their project hedge against Chirano.
And 2008 and beyond?
Well, I think the ongoing run rate of the hedge book, that is the level of contracts that are scheduled to expire in any given year, is around about 4 million ounces per year. So the expectation is for a significant reduction in the rate of de-hedging, although it is expected to continue over the next couple of years.
Well, interesting story, as gold always is. William Tankard is the senior analyst with GFMS, talking to us from London. Sorry about the little time delay there in some of those questions, but it was interesting nonetheless. Also, good news for gold, generally speaking. If you consider the fundamentals are certainly in its favor. Isn't too much more de-hedging that can be done by the gold mines. but it still continues in that direction. And jewelry demand, strong ETFs being here in South Africa. We've seen some enormous increases in the new gold allocation of gold from that ETF, and it's not just in South Africa where that is occurring, it's all over the world. Well, that's all from Power Lunch for today, brought to you in association with MoneyWeb. We're crossing now to CNBC Europe for Power Lunch Europe with Louisa Boyson, CNBC Africa, back at 4 o'clock Central African time with regional updates.